Hello everybody, this is Toni Turner and welcome to the market now as of about 2 p.m. on Friday, May the 10th. Before we get started, I would like to wish all of you moms out there a very happy Mother's Day. And now on to the market. U.S. stocks are off their session lows so far today, but the S&P 500 remains on track for its worst weekly loss since December as investors fret over a potential long-drawn U.S.-China trade war. The rising tensions between the world's two largest economies have renewed fears of a global slowdown. And so on that note, that cheerful note, let's go on, see what's happening, and look at three charts that could give us a little insight into the week to come. First, as we always do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $286.25, or about $28.62 on the S&P 500 itself. Now, the most recent all-time closing high came in on April 30th at $294.02, or about $29.45 on the S&P 500. Now, as the market is concentrating on trade talks between U.S. and China, it did pull back this week. And today, when I captured this chart, the SPY, as you can see here, it's white knuckling the green line. That's the 50-day simple moving average. And that's an important line in technical analysis. A lot of institutional traders and investors watch this 50-day moving average. Of course, as traders, we watch it very, very closely. It's kind of what you could call a short-term to intermediate-term trend line. And we like it when our stocks in the S&P 500 and the other major indexes are trading above the 50-day moving average. So far today, again, the SPY is white knuckling this line. It did drop to an intraday low here of $282.30. Then, fortunately, I will say on a couple of comments from Steve Mnuchin, it did move higher back up to its present price, again at $286 and change. Now, as I said, ideally we like to see the SPY trading above that 50-day line. It does have more potential support if it needs to go lower down here at 280, that's 2800 on the S&P 500 index. And of course we have more support coming down here at about 273. The 200-day moving average is coming in right now, and this is a big, strong, tough potential support line if it works. If it holds, the 200-day moving average is, of course, a long-term moving average, and it's coming in here at 277.28. We see now the RSI that was so overbought in the past few weeks has now come down, not into oversold territory, but certainly lower, down to 42 and change. You can see here, too, the red line, the MACD signal line, has fallen below the MACD line. So we're obviously in a little pullback and a retracement here. Now all we can do really is wait and see in the coming week if the trade talks go well and if the SPY can hang on to its current levels and remain above the 50-day moving average. If it cannot, then it may need to take another leg low down here, potentially to support at 280. Again, that's 2800 on the S&P 500 index. Our next chart here is one we haven't looked at in a couple weeks. This is the iShares Russell 2000 ETF, symbol IWM. Now, as I've told you before in Tony's Market Club, we watch the IWM. This is small caps, small capitalization. That means companies that are valued from about $300 million to about $2 billion. We watch it because small caps can act as a leading indicator for the broader market. Now, we know that it has not gone up to its prior highs like the NASDAQ 100, the NASDAQ has, the SPY went back up to its highs. The IWM here, since it came off its lows down here, and moved higher, moved in a very nice uptrend from its December 24th lows. It did move up, but didn't move up as high as the other major indexes. Then it just kind of sat around here from February, made another dip in March, came back up, and then so far since March has stayed above its 50-day moving average until about right now. And right now, when I captured this chart, it was trading at $155.63. Now, you may have been with us when we talked about this long consolidation. We talked about the IWM being unable to go above the 159 number. Finally, a week before this, it did move up to 161. We were encouraged, but then on this China-U.S. trade talks, it moved back down, sitting now today on the 50-day and the 200-day moving average. It's just like barely right now sitting right on that 50-day line, and the 200-day line's coming in at 155.37. So it is hanging on for dear life here. Potential support again sits at Thursday's and yesterday's low at about 153.70. Then we move on down to potential support at 150.60, $150.60. Then on down to what I would say it needs to hold here at least at 148. And we can see that 148 comes into play here back in November and October of last year. So that could be an important line right here, an important potential support point. So, well, bottom line, speaking of lines, bottom line is whether or not the IWM in the coming week can remain above that 50-day moving average. Be nice if it rose back into at least into its consolidation zone that it was in before. Or, maybe it has to take a dip lower and head back down toward 150. We will have to see. But I do use the IWM. I do keep it on my screen. And I do watch it to see which way it's going, because sometimes it can offer kind of a warning of, hey, maybe you need to take some profits here, or maybe you need to firm up your protective stops. Now let's go on to our last chart of the day. This is a chart we haven't looked at probably in quite a long time. This is the Invesco Dynamic Food and Beverage ETF. The symbol is PBJ, kind of cute there, PBJ, right? The top components in the PBJ are Starbucks, Yum Brands, Mondelez, Coca-Cola, Keurig Dr. Pepper, and Archer Daniels Midland. Whenever we get into a market like this that's kind of volatile or has the ability to get more volatile, I like to wander off. Into parts of the market that everybody isn't staring at. And I like this PBJ right here. Now, after falling to a low on December 24th back here to a low of 28.60, the PBJ did climb, and this is one you don't hear people talk about much, but the PBJ did climb back up. It walked up its 20-day moving average, got almost back up to its prior highs here, December highs, then couldn't handle it, fell in March like everybody else, then did move back up. It always stayed above this 50-day moving average, though, in this climb, and moved back up to its present price when I captured this chart was $33 up here, $33.91. So I'm keeping an eye on the PBJ. This is not a day trading ETF by any stretch. It doesn't have that kind of volume. But it is in a good mood here, and in a down day and a crummy day in the market, the PBJ is actually moving higher. So again, it's trading right now at $33.91. So if in the coming week the market can remain positive or get more positive, start moving back up that retracement, and the PBJ can remain above 33.50, right down here at this pivot is 33.50 is the lows. If it can remain above 33.50, I may add shares to my portfolio with an initial protective stop as a close below the 50-day moving average, and that 50-day is now coming in at $33.08. So if I did buy some shares and it fell, I wouldn't want it if it closed below the 50-day moving average. Of course, you can make your stop tighter than that if it's something that appeals to you. So keep an eye on the PBJ in the coming week. And now on to the coming week's economic reports. But first, I want to alert you to an exciting opportunity. This is the perfect time to check out my popular online training, How to Bottom Fish Like a Pro. We are offering this training right now at a 20% discount. That will only be for a couple of more days. Please know there are a host of high-quality stocks that have sold off recently and even sold off in the last couple of months, and they are now ripe for the picking. With this training, you will discover quickly and easily how to spot stocks that have sold off and that are ready to reverse higher. And that could give you profits of 20, 30, 40% or more. Plus, many of you will be able to pay for this low-price training with your first trade. So check out the offer by clicking the button below, or go ahead and go to the URL, the address you see here. Probably easiest to click on the button below. And now on to this coming week's economic reports, I should say. Monday, not much, or Tuesday. Wednesday, we have the Empire State Manufacturing Index, retail sales, and our usual crude inventories. Thursday, we'll have our housing starts and building permits, plus our usual jobless claims, and the Philly Fed and natural gas inventories. On Friday, we will have the University of Michigan Consumer Sentiment Report. Again, you're going to want to check out How to Bottom Fish Like a Pro with a special 20% discount available just for the next few days, couple of days. Learn how to buy low and sell high. This is the way we should all be doing it. It's a simple and effective approach to the market that can earn you more money from now on. So go to the link on this screen or simply click on the button below and check it out. Until next time, keep green on your screen. I'm Toni Turner, and this is The Market Now.